I don't know.
Does this always flash red?
Oh, there we go. We got sound now. I don't know. No.
Does this always flash?
All right, we got the wife helping out. You hear her? I think we're good now. Jeez Louise. I don't know what that was all about. All right, now we got sound. Okay, take two. I guess you can hear me now. Yeah. You guys got sound now. So, let me turn this down. Jeez, that's embarrassing. 182 episodes in, and you still get gremlins in the machine, right? And now I'm all out of sorts. Let me make sure I have the right audio on. No, it's on the MacBook. Yeah, I don't know. This is awful. For some reason, this is not working. This is wonderful. I'm so happy you guys joined in. I mean, we may have to. I do not know what the deal is. Why my fancy pants expensive microphone is not working, but I think we're gonna have to go with this. Is the audio really bad? Because yeah, I don't know, guys. I'm gonna have to. All right, I don't know. We're just gonna have to go with this. So this microphone is not working, and I don't know why I see it coming in there. So something happened, guys. And all right, well, what do you mean the mesh T-shirt? Anyway, all right, we're rolling with it. It's picking me up through the MacBook, so the audio is not going to be good for this episode till we figure out what the hell happened. But anyway, I think I was saying congratulations to Ryan Williams. He is. Oh, thanks, Craig. Good. Ryan Williams is dad. His baby came. We also have the Blossom event. So I wanted to point out to you guys that if anyone's in Chicago and they want free tickets, I still have 5 free tickets I'm trying to give away. And, between us, I think that, our Brandon and the Blossom folks up in Canada, I don't think they're very familiar with, especially the Chicago area. And I was talking to, I was actually talking with Ian Lopik, and he said that they were having issues with Chicago. Like there's half the tickets are sold. They have a lot left over. And we, and I'm like, dude, it's a Tuesday night. Cause they were like, hey, Blossom sold out. The Toronto event sold out. It was a Sunday afternoon. I think New York was on Saturday. And LA is, I think, on another. And then all of a sudden they're like, yeah, Chicago's not selling. What the heck? Why? Well, it's a Tuesday night in Chicago. Not easy place to get to. People have work. They have families. They have things going on. So, well, I'm way over 100K invested. I don't know where you saw that metric, but so, all right, let me reset here. It's bugging me not having this microphone working, but all right. Now we are going to John. Yeah, he said, oh, John, it was a little confusing. He emailed me and said he wanted me to explain the whole Simply Safe Dividends website and how it works and everything used. I mean, I don't think we can go that deep into it. And then he also said to make sure I go answer every comment in a timely fashion and answer everybody detailed, but not too detailed. So, John, I mean, it's a tall order to ask for, and we'll do what we can. But let us know how your weekend's going. What do you guys got cooking? What are you buying? What are you looking at buying? And this is going to bug the hell. It's just, I'm a bit of a perfectionist. All right. I mean, we can hear it, so I had to turn just to hear what it sounds like. Mike, what's up, man? I've been seeing you on Blossom, man. Thanks a lot for that. Yeah, I hope you guys enjoyed the interview with Kelly. that was a lot of fun. And yeah, we've never done a roast. She's never done a portfolio roast. So, yeah, it wasn't as brutal as I thought it might have been or whatnot. But I think there was still some important takeaways in there. Things that, hey, she likes the BDCs. She likes income. She buys up until or down until 3.5% yield. And Adam, you're not the only one, man. I know that I saw a headline about they're talking about the multi-trillion-dollar AI bubble that could pop. All right, well, we've been in a bubble for a while now, so we'll see if that happens. I know there's been a lot of correlation between the dot-com boom bust and then the AI boom bust. And yeah, Steve, I know I thought about that, but dude, if she were to go through every position, it could have been a 3-hour long video. And I really like to keep the conversations maximum about 45 minutes, 30 to 45 minutes. And that's I just think an hour, unless somebody's famous, like look at the Compound and Friends, which I shared the Peter Lynch interview. What was that? 50 minutes? That wasn't even an hour. So if they're not even doing an hour with Peter Lynch, like who the heck's going to want to, So we'll also look at your stocks. So I will wait. If anybody wants to, check out what you're getting, look into something, I will actually share with this. So I will go to the newsletter. If you don't get the newsletter, it's free. It's weekly. And you know what? Lately, it kind of stinks because there's been more people unsubscribing from every letter. So why that is, I don't know. But hey, all right, let's show you guys what I bought real quick. I'll get that party started with that. And yeah, if you get the newsletter, this will be old hat to you. But let me do one thing. Sorry, I had to yell to my family for something here. Something very important, I assure you. It's all behind the scenes here. This is the newsletter, and yeah, it was on. I had a conversation with Josh M. McCann. I think he pops in private message, and it was an interesting talk, and the VIX popped up, and I was like, oh yeah, I should remind people about the VIX because we hear about the VIX being the fear gauge, and it's really just short-term volatility. It's 30 days of expected volatility in the market, and they call it extreme fear and greed, right? The fear gauge. But anyway, we'll just go right down to where this is the dividends received this week. Check it out, y'all. $520.07 in 1 week. That was pretty cool. Kicked it all off with a massive whopping 10-cent dividend from Soxel, the daily semiconductor bull 3x shares. It's 3x the movement of the semiconductor index that it tracks. And I bought this. I should have bought 100 shares at $9.50, but I was too chicken S, and I said, you know what? I'm going to do just 10 shares, see what happens, see if it can get back into the 30s one day. And I'm still holding it. They say it's not for a long-term hold position, but that's okay. So anyway, then $244 from Ares Capital. That was nice. $40 from Nike. $30 from SCHY, the international version of SCHD. $158.06 of SCHD. For those of you on Blossom, I'm surprised nobody asked me, hey, why did you sell SCHD? Because it would have popped up. We'll get to that in a minute. And $47 from VTI for the dividends I received. And then this is what I bought this week. $15 15 shares at $20.26 of Ares Capital. I used some of those dividends, right? We talked about it with Kelly, to strategically redeploy. And then some of those dividends also went into a share of Agree Realty, 3 shares of SCHD at $27.09, reinvesting those, and 2 shares of SGov in my taxable at $100.54. And this is just money that's kind of hanging around, waiting to be invested. So that is kind of what I bought and what what we're doing there, right? And once again, if anybody just jumped on, if you're going to be in Chicago on Monday night, so I didn't mention that. Why is he wagging his finger at us? I feel like we're in trouble. Ian Lopick is going to be at the Starbucks Reserve. He wants to hang out with you. If anybody can make it, have a cup of coffee, talk investing. Say talk investing. He would be so happy to do that. And I would love to be there, but fortunately, my daughter is the regionals, the IHSA, Illinois High School Sports Association, I think. It's the girls flag football. It's the playoffs. They start tomorrow, so it's a win or go home. And they're playing a school that they lost the nail biter to earlier in the season. And I'm going to it. My daughter's a senior. She's 18 now. And it could be my last time ever watching her play flag football if she doesn't play in college. So kind of important to me. And I just want to make those memories with my family. And you know what? Hey, Ian's going to be there, right? God forbid, bro. He'll be there if wanted to. We could fly out to somewhere near him if I really wanted to have a cup of coffee with the guy. But these moments with your kids and your family, you just don't know when you're going to have those opportunities once again. So, so I won't be there tomorrow. And if she does win, I'm going to have to miss out on her playing on Tuesday because I'll be at the Blossom event. But it's okay. And no offense, but they're playing one of the best teams if they win. And they got just it was silly. They got crushed. But yeah, kind of like it would be almost like a high school team playing, I don't know, the Buffalo Bills. There's a chance, but it's probably not going to happen. Let me just see if I missed any of those. Yeah, Craig, glad you enjoyed that. And we enjoyed you talking with you. We'll do it again. Mike, you're in the middle of transferring your ETF to other brokerage account for leaving your stocks. Any reason, any method to the madness? Why? Why are you doing that? We'd like to know. Oh, where's John timing the market? I didn't see his. Anyway. There we go. Here's some buying. Gorilla Nurse. You're up in Wisconsin, right? Are you able to make it to Chicago tomorrow night to the Reserve, the Roastery, and meet up with Ian? I don't know. And if you want to go to the Blossom Investor event, hey, we got tickets, to give away. Like some of you just joining in, it's a Tuesday night in Chicago. I don't think my friends from Canada, on the west coast of Canada, realize what a pain in the ass it is to get into Chicago on a weeknight, right around rush hour. Rush hour lasts here from, about noon until midnight is about rush hour on Monday through Saturday, So it's, anyway, it's planning. I think they're learning, but, I'll be there. I'm planning accordingly. But Gorilla Nurse, you bought Smuckers, Mondelez, and Comcast. Okay, awesome staples there. By the way, as John requested, when we go through Simply Safe, I'll briefly just point out some of the metrics there. I do like Kelly. She's fun to talk to. She's been doing this for 12 years, writing about investing and dividend investing and passive income. So you have to, I like her point of view. I mean, she gave a few cool tips about BDCs. She thinks in 2026, BDCs are going to come back. They're going to be higher than they are now. And data centers, she thinks data centers are where it's the place to be. Matt bought Waste Management. What's OBDC? I don't remember. Oh, is that Owl Rock or? I'm writing with my left hand. I don't write with my left hand. You can't read it. Looking to make Waste Management your largest stock position in the portfolio in October. You're welcome. You know what, Fat Matt? I just call you almost Fat Matt. What the hell was that all about? That's me trying to shift my cups around over here out of view, off the camera view, and thinking there's some hot tea there. And I'm talking to Matt, thinking about my tea. But the newsletter, yeah. You know what, man? I worked this morning. I kind of cranked out the newsletter really quickly. And spent time with the kids, went for a bike ride. So, I mean, it's been a busy, busy day, and I wouldn't have it any other way. But the newsletter, dude, it's a labor of love. You guys know I have a couple ads that I at the bottom, and it's affiliate. It's like perpetual. If somebody clicks on it, and I'll get a buck or two here, but I mean, it's been so long. So I write it. It's a labor of love. I enjoy it. I feel that it helps me to become more smarter about investing. Boy, how's that? I tell you guys, I barely graduated high school, but if the thought is if you want to learn about something, write about it, because I look for links, I look for sources. I work with my buddy Claude, who's my thought partner, right? I use AI properly, at least I think. I use AI as a thought partner. I say, am I thinking about this right? I'll write out the whole newsletter. I'll say, can you look for any inconsistencies? Can you improve the flow? Can you consolidate redundancies for me? Grammar, things like that. So it really does help. But I never, ever do I say, write a newsletter on dividend investing for me. Never do I do that. And in the course of working with my thought partner, if I don't understand something, I will talk with it until I grasp it and understand it. So tell your friends, your family, your kids that AI will destroy your brain. It can really hurt your cognition, your retentive cognition in your brain webs if you just have it do everything for you and you don't understand what it's doing. Because I know people do that. They will say, write a tweet, write a post, write an article on this, and then they copy, paste, done. And they won't even read it. So, Bill, that helps. I'm glad you enjoy it. And again, I learn, I liked refining about the VIX because honestly, before the newsletter, all I knew is that the VIX looks forward 30 days. I didn't have a more refined answer that it's based on the option premium. So it's options that are driving it, and it's the expected volatility. So I just realized I didn't light my candle. How about that? Well, all right. John, I'm already breaking that. Sorry, Michael. I saw Trump stuff. I'm like, we don't get political here, so you keep your Trump stuff to yourself. But yeah, you wish you could be in Chicago. That's cool. PBDC, don't remember PBDC. Another OBDC, Aries Capital, TME, and TCEHY. Is that 10-cent holdings, I think? You know what, Eddie? I will say it's going to be really hard to live your life if you don't have a decent roof on your house, which also is a fun thought because a roofing material. Remember was it last week when we did all the the Twilight Zone version of Bubba Gump if he was in roofing instead of shrimp? Bubba Gump Roofing. What company was that? I don't remember. And roofs you have to have them. When roofs wear out, it has to be replaced sooner or later. Every new business, every new building, every new house has to have a roof. It's kind of a non-negotiable. So there he is, Josh. What's up, man? I still got to get back to your DMs on Blossom, but I told you, dude, I've just been so freaking busy today. It's just been going. I wish you guys could see on my end. You'd be like, you'd probably need a nap if you saw how I'm literally going and then I'm like, hey, let's get dinner going. I got to be on in 30 minutes. So that's kind of how it goes. Dude, Josh, anyway, thanks, man. I appreciate that. I wish I had the Better Off Dead $2 when he's following, don't remember the character's name, when he's following my guy from Chicago, stalling. Come on, brain. Come on, make the connection to it. Grows Point Blank, John Cusack. Yeah. Knew we'd do it sooner or later. Fat Matt. Yeah, no, I don't. That's Fat Matt. Hey, things slip. Oh, an alien. No, dude, my daughters put this guy. So I have a thing. You can't see the tattoo, and I'm not going to show you, but I have a thing for sugar skulls and Dia de los Muertos. So it is there we go. It's a little Halloween decoration that, please zoom in. Come on, camera. There you go. Look, he's got, hey, it's a, yeah. I love Dia de los Muertos stuff. I grew up in a Latin area, a lot of Mexicans, a lot of Mexican friends. So, yeah, Sugar Skulls, Dia de los Muertos. Love that whole. Kelly had a Dia de los Muertos skull on her bookshelf. So that's, yeah, I'm as ready as I'll ever be. Ian, I talked to Ian last Monday on the phone. He kind of freaked me out because he was like, yeah, so in the Toronto event, I gave a 30-minute presentation, and it was moderated by Harvest ETFs, and it was between Adriano, I think, who's on Blossom. And I was like, say again now, 30-minute presentation? I thought, we're just going to have some laughs. I was going to be up with like maybe 6 other people and then answer a few questions for a half an hour or something. So, yeah, he always drink the tea when it's too hot. But Ian did say that they spent a couple months kind of prepping that and doing a little bit of rehearsing on Zoom and how it's going to go and whatnot. But yeah, he scared me. I was like, I have nothing prepared, man. I can do this. I mean, I could just do a live stream up there. But anyway, we'll get to Simply Safe. John requested that I explain some of Simply Safe's metrics and why we're looking at that or why they use it. But Adam is going to add to ConAgra, Target, Bristol Myers Squibb, Prudential, Elevance Health, STWD, and I don't know STWD, and start a UPS position. Oh, assuming they'll cut the dividend. That's really interesting. So you are assuming that they're going to cut the dividend then. Wow. Okay. What is the candle scent? Dude, you guys are I'll just start pulling everything off the back here. I don't know. It's one that my family didn't want. It's Tropical Sunset. If this is turning into show and tell, there you go. Tropical Sunset. Where it's from, I don't know. I forgot to light it because I told you I'm busy. All right. So somebody show me something you. No, did it happen again? Somebody tell me we're getting sound. Is that just on Bill's end? Because okay, good. So if you're just tuning in, what happened was this microphone, for some reason, I don't know what, I'm big hurry, I didn't check it. It is not picking up sound. This microphone isn't, even though I see my interface picking up my voice. I don't know what's going on. We'll see. Maybe, I don't know. But anyway, good. Yeah, you can't do that, man. When I start the show and there's no sound and then you tell me you're not getting sound, I'm freaked out. But all right, now here we go. What were we going to do? Somebody give me something to look up so I can do this little exercise. Give me yeah, and the sound is off because it's my MacBook is picking up the sound. So I'm going to have to do a little bit of, figuring out troubleshooting, but not now, not while I'm live, right? But yeah, someone come on. Amazon Pep. We'll go with Pep Trivon because one's an ETF, one is Amazon. But Michael, we will do news. So we're gonna roll with news right now. Forget about it, and then we'll go through Pep, and I'll point out a few of the metrics. Now, what was Monday? Last Monday was 9/20. Yeah, my birthday. My daughter's birthday was a week ago tonight. And I need to give you guys more real estate. That used to just be default set. So, yeah, Pfizer. How about that? They're still up there. $27. Nice. All right, this is quick news. There's not a lot. Honeywell, ticker HON, raised the dividend 5.3%. That's the 15th consecutive year. Dividend raises, and it looks at the lower end of reasonably valued. I don't know this. I'm assuming it was a closed-end fund, Conan Steers Infrastructure Fund. They reaffirmed the dividend safety score of 70. They refreshed their outlook on AT&T. Now, an outlook by Simply Safe Dividends is their own unique opinion. You won't find it anywhere else on the internet. They didn't the people in-house, Brian Bollinger, his team, they wrote it. Electronic Arts, yeah, how about this news? Going to be acquired, going private, and it was the largest leveraged buyout in history, a group led by Silver Lake and a Saudi Arabian, who was a public investment fund, $55 billion deal. Yeah, that's Madden, right? EA is huge. Who has had, let me rephrase it. Thumbs up if Electronic Arts has been a big part of your life, because for myself in the 90s, we would play Madden and NHL. Those two were just huge. Friday nights with my buddies, my mates, lots of soda, Doritos, B96 on the radio here. You'd be getting all the, Mars, pump up the volume, all those cool. I love it. I love that time. It was a cool time. Freestyle music we'd be listening to. But anyway, so see how you go from one thing to the next. Electronic Arts, there you go. And then Starbucks. This is one of the fears I had and why I moved on. I was worried about, because look at the 1.6, that's a token dividend raise. And we'll double click on this for a second here, that the dividend, yeah, they're in turnaround, right? And look at the dividend growth. A lot of things I don't like. We'll just go through here real quick since I got you. The 10-year dividend CAGR, 15.5%, very fast. 5-year, we're down to 9.3, close. Now we got a 1.6% dividend raise. So that dividend raise is slowing down. It was a token. It could pick up again. And yeah, it looks expensive to me. The PE of forward P of 35.3. So you have a turnaround in progress, slowing metrics. And then what do we got here? Yeah, earnings payout ratio, 102%. Free cash flow payout ratio, 123%. It should come down, but right now, don't like the look of that. And their margins have been compressing. Free cash flow per share dropping. Earnings per share obviously dropping. Sales growth, 1%. Earnings per share growth, negative. Sales, right? It's really hard to mess revenue, like what's coming in the door. So that's an interesting metric to look at. That's hard to be faked or accounted, right? Manipulated, massaged financially by the accountants. It's flat. It's gone flat. It's only a couple years, but it's still flat. They are pausing, kind of buying back the shares, right? Not really doing much of that lately. So it's just all around return on investment. So return on equity, if you see that, actually how it's negative, I guess we'll do a little bit of what you're talking about, John, is that the shareholder equity, when a company buys back shares on paper, like the accounting metric, it looks bad, but it's returning cash to the shareholders. So companies can be strong and have a negative return on equity if they are buying back a lot of shares, because that reduces the shareholder equity base. Yeah, but anyway, so that one I'm not too worried about. But yeah, return on invested capital, that's dropping. And just, you can see, this is Starbucks again. All their margins are compressing. And they do, now this isn't right. I know they have debt, but interest coverage ratio, which we'll get into, we'll go look at PEP. So, all right, that's Starbucks. I think we had one more news item. That's what I was worried about. You have a turnaround, you have compressing margins, you have a dividend now that's token raising, payout ratio that's well over 100%. Now they're closing stores. They're doing what they have to do with Brian Nickel. I know Kelly said she didn't like it, but didn't like him. Darden, ticker DRI, Olive Garden, I think they own, right? Reasonably valued. They reaffirmed their safety score of 70 safe. Two more, they refreshed their outlook on MSC Industrial, which is 84 safe, and they look overvalued. And then a mudslide at one of the major copper miners, Freeport McMoran. Freeport McMoran. And they reaffirmed their safety score of borderline safe. Now, we're going to do PEP, right? So hang on a second in the chat. We'll go through this right quick for you, Trevon. PEP, there you go. Looking undervalued according to Simply Safe. And I'm going to try and do this as quickly as I can because I love talking to you guys. I don't want to just not hear what you guys are saying. All right, so we'll start there. Obviously, some of this is self-explanatory. You've got the dividend growth, right? Tells you the compound annual growth rate or compound average growth rate is those numbers there, the CAGR. Let's see. This is all payment details, self-explanatory. Valuation, this is Simply Safe, something they came up with where the gray shaded area is the 5-year average price to earnings ratio, right? The 5-year average, and they go 10% above that and 10% below that, and that's the gray shaded area. So currently, when it drops below that, it looks like it could be a good time to buy because it should come up. But then when it goes above that, it looks like it could be overvalued. So that you might want to wait. And again, that tells us nothing about the future of the business, but historically, it gives us an indication of it might be a good time to buy when it's below, like it is with Pepsi. Dividend yield, above or below the 5-year average. You want to see it above, hopefully for the right reasons. You don't want to see a company that's in financial straits, kind of like the Ford PE ratio there is below. So good time to buy. Value investors when the forward dividend yield is above and the forward PE is below. All right, real quick, if we can do such a thing, right? Earnings payout ratio, how much of the company's earnings are being paid out as a dividend? And Simply Safe wants to see it below 70%. With free cash flow payout ratio, I like that better. I know Kevin likes earnings, but the dividend is paid out of the free cash flow. So to me, that is a much more accurate way to look at the payout ratio. And you want to see that below 70. So PepsiCo, kind of like Starbucks, has been over 100% now for a little bit. So that's the free cash flow payout ratio. If it's too high, hey, you can't pay out all of your money that's left over for everything else in the business as the dividend, because how are you going to keep the business running? And then these numbers are tied together. Sorry, these two, the free cash flow payout ratio and the free cash flow per share. That just, when the free cash flow per share drops, you're going to see free cash flow payout ratio rise and vice versa. And again, they have a little blurb, explains what these are. Yeah, like here we go. Free cash flow is what's left after a company has paid off all its bills and reinvested to maintain and grow the business. And yeah. Advantaged businesses tend to generate stable, growing free cash flow over time, fueling sustainable and rising dividends. So free cash flow, lifeblood of the business. And you want to see that rising, hopefully. Earnings per share growth, it's kind of self-explanatory over the last year as a hopefully going up. Sales growth, right? Cyclical businesses, up or down. Pepsi's been going down. This is PepsiCo. You want to see that predominantly flat or going up. Shares outstanding. I mean, a lot of these are self-explanatory. The number of shares outstanding is you want to see them hopefully buying back, but not at a crazy valuation. That's one way that they can return money to shareholders is buying back shares. So it's when that decreases, the existing shares become more valuable, especially if the company keeps making money. Total sales, yeah, I see PepsiCo's flattened out too. This is, again, like I said, it's a hard number to screw around with because you're making sales or not, right? So although I'm sure there's ways to manipulate it, the money coming in, and I know they can buy when they recognize it. Is it, and for this one, I guess that'd be a question for Brian Bollinger. Is it a sale when the exact sale happens or when they actually receive the money? Because they can cancel orders or orders can be changed. So I don't know if what that number is representative of, but I will say this is why you want to look over a long enough period of time, because if there is some tomfoolery or shenanigans going on, then you'll see it. But it may affect for 1 year, right? Or a couple months or a quarter or two. So that's why it's good to look at years in aggregate, right? All right, we're getting down there. Return on equity, that is the So, and I know if this is getting boring. John, you asked, when a company puts shares out into the market and people buy them, that's shareholder equity. They receive money from the shareholders, and that is the return on that money. So hopefully that's going to be rising or stay high over time. Return on invested capital. This is the money that is both from shareholders and from loans from debt. So shareholders' money they put in and from debt that the company has taken on. What are they doing with that money? How is management allocating that? So that's that. Operating margin. This is EBIT, right? Earnings before interest and taxes. And this is important because, again, all right, let me rephrase that. Earnings before, this is boring. I know this might be boring to some of you. Earnings before interest and taxes is your operating margin, right? Operating income. But it tells you nothing just as a number by itself. So this is divided by the cost of goods sold by the total sales. So you're taking your operating margin, you're taking your earnings before interest and taxes and dividing it by the total sales. So it's going to show you profitability of the business, right? And somebody correct me if this is wrong, or you can explain it better. Free cash flow margin, how many dollars of revenue, so how many dollars of that sales are being turned into free cash flow. So currently for Pepsi, $8 of every $100 in sales is making its way to free cash flow. Net debt to EBITDA, Charlie Munger calls it BS earnings. Why? Because the DA, you have earnings before interest and taxes, depreciation and amortization. The depreciation and amortization are accounting metrics. It's a real cost to a business that has to be paid. It's just when is it recognized? And Charlie doesn't like it. EBIT is a little bit better. But how many years would it take using EBITDA for a company to pay off the debt? Currently, Pepsi's at 2.2 years. Net debt to capital, how much of the company's capital structure is debt? You want to see that the lower the better. Why? Because all debt has to be paid back. It's inevitable. At some point, the debt has to be paid back. And if the debt is having trouble being paid back, dividends are going to get cut. Things are going to happen. And currently, 70% of PepsiCo's capital structure is debt and not shareholder equity. And, one more word on that real quick. With shareholder equity, it's crazy because if a company issues shares just one time, and it was 40 years ago, then they've keep continuing to make money on that original shareholder equity. So it's just, it's a great thing when you can do that. And you don't have to keep burning cash by issuing new shares like they do with some of the biotechs, right? They just issue more shares and they burn cash trying to land that blockbuster drug. And then, the interest coverage ratio, you guys are probably familiar with that. Last one here. This divides the operating income, your EBIT, by, or not. How do I explain this? You want a higher interest coverage ratio. It's how many dollars of operating income or EBIT does a company have to cover every $1 of interest on the debt? Currently, it's for PepsiCo $15.90 of operating income or EBIT to cover every $1 of interest on the debt. So this went real long, John. I hope you're happy. You blame John. He's the one that wanted that. So I'm back now. You guys, I love it. You had Madden. Beautiful. Oh, that's fun, dude. Now we could talk the rest of the live stream about the old 90s NHL hockey, but I do think we had that rule because we were all from Chicago, and also with the LA Kings, it was kind of like, because Gretzky was like a little bit of a cheat code. Oh my God, a lot of you are my age. Fast Eddie, yep, I remember that. But let's see what else you got. Oh, I thought that was a ticker symbol. I think you're talking about the game mist, right? Yeah. Dude, Adam, you're giving a clinic here. You're giving all that. Now you're getting me itching. You want me to play. Ah, look at this guy. All right. Gorilla, you want to look up PSTL? We could. I did look at them once. I think they own real estate that post offices are on. I believe they went public they were founded in the 80s and went public. I think they went public in the, I don't know, mid 2000s or something. But anyway, we'll look at that. Yeah, PFE, Mr. J. It's not for me. I don't know. Pfizer constantly keeps making these acquisitions that just don't work out. What do they call them? Synergy. Yeah, Bill. And again, I could do a much better way of explaining that if I had scripted it out and, dotted every I and crossed every T. So you got it live here. And I'm giving myself working behind the 8 ball here because I got, I'm sorry. I'm an addict. I got the Bills game on in the background, so on mute. Nah, don't be sorry, John. I'm dude, Adam, that's great. What a game. That was fun. Bringing back memories for this guy. Thank you. Thank you for giving me those memories. Let's look up PSTL and PFE. And John, don't be sorry. It's good. It's good to do that. I appreciate that, Bill. It could have been a little better, but hey, you get what you pay here. You're paying with your time, I guess, right? All right, let's look up PSTL because I think I had looked at them and there was something that I didn't like. Something turned me off about them. And we'll actually also peek in on Seeking Alpha to see what they have to say about these, ladies and gentlemen. We'll start with PSTL for you, Krilliners. By the way, anybody new wandered in, I have 5 tickets to the Blossom of Investor event in Chicago on Tuesday night at the CBOE if you can make it. And if you're also in Chicago on Monday, October 6th, tomorrow, Ian Lopic, the one and only, will be hanging out at the Starbucks Reserve in Michigan Avenue, and he's looking for people to have a cup of coffee and chat with him. So PSTL, here we go, is Postal Realty. They say they could be undervalued. 6.3% dividend yield. Let me see if I was right. Okay, I was wrong. I may be misremembering. I think they were founded in the 80s, though. I don't know if somebody even cares, but I'm pretty sure they had their start, and I think they reformed something like that. I usually have a pretty good memory, but yeah, they own over 1,500 postal facilities that the government runs from them. I think this is what I didn't like. Slow dividend growth, although they do have a nice starting yield. Yeah, they did grow it quick, went right out of the gate. Let's see. Based on the 5-year price to adjusted funds from operations ratio, it is a little bit undervalued, they think. And yeah, you look at AFFO payout ratio for REITs, which is low enough. Yeah, no problems. I mean, I think they were just okay, but let me see here. Good. AFFO per share is growing. I think they obviously dilute like most REITs. Dilute? Sales are going up every year, so that's good. I mean, if they are putting more shares out into the market to bring in more money, then yes, you want to see that they have more sales and more AFFO coming in. Let's see. Yeah, their margins are just low. I mean, they're a REIT, but I don't know. It didn't turn me on. Everything's just okay. Everything's just okay. And then let's see what what the analysts say here. So you get a couple analysts. Look at it. Nice. The quant gives it a strong buy. And the analysts all say from August 22nd, buy. You get a buy, 2 buys on the 22nd. Good time to get in from Sanjay Chandramani. All right, they're all either strong buy or buy. And going back to you have to go back to November of 24 to see a sell from the compounding chef. So there you go. The quant says buy. A bunch of analysts all say buy. And then what did you want to look up? Oh, yeah, Pfizer. We'll start with here. We'll go backwards since we're on. Let's see what everyone here says about Pfizer. Nope, I hit the wrong button. So the quant gives it a hold, but the analysts think it's a buy. And yeah, it's just, I mean, over the last 10 years, what are we up? Over the last 10 years, just on price, Pfizer's down 17%. But let's see. I wonder if we do, let me just see for you guys, if we do total return. No, I'll do that. This is what I want. I messed up. Let's do Pfizer versus, how about VOO? That's popular. We'll go do that. I didn't hit the right button again. Okay, everybody, let's try it again. Pfizer versus VOO, update chart, select metrics, XL price return, put in total return so we can see what dividends. And over the last 1 year, I think you guys can see this. 3 years, Pfizer's down 27% with dividends received, while VOO is 91%. Yeah, just rough. I mean, look at over the past 5 years. S&P 500 is up 112%, but Pfizer, and dude, this is including right out of COVID too, you know? Pfizer is down, it's negative with dividends received. And 10 years, there you go. You get, for 10 years, you have 33% for Pfizer and 300% for the S&P 500. So we'll see what happens with that. What if we do max? Oh, there you go. Hey, if you got into Pfizer in the 90s, in 1995, when I was in high school, you'd be up 726%. So, all right, I wanted to go back. That's a summary just because I'm goofing around here. Some of the analysts give a buy, couple holds, strong buy on September 25th. So they're all over the place. It looks like worst case, Pfizer's a hold. 1 sell here. You go back to September 18th. But I think a lot cover it up, or a lot of analysts cover Pfizer, I mean, is what I'm trying to say. All right, let's look up PFE on SSD. Yeah, it looks undervalued. They think they give it a borderline safety score of 60. I think we just looked this up recently. We did read this. They reaffirmed their safety score of 60 borderline safe. Even after they announced the $5 billion Metsera deal, they still say it's borderline safe. They just reaffirmed the same safety score. But yeah, it's just slow growth on the dividend. I mean, I guess you're buying hoping for the future. I think that's what my thought was on that, where I guess it looks like an okay time to buy if you believe that they will do well. But all their margins, like free cash flow payout ratio, at least that's coming down. Free cash flow per share is slowly growing. That's good, but I'm sure they took on more debt, right? They've made a couple expensive acquisitions. And yeah, shares are flat. They're not buying back shares. Sales are still down. I don't know. That just worries me. Doesn't it worry everybody else when they had the vaccines and everything just shot up and then off a cliff. So I don't know. The margins are low, getting a little better. I don't know. It just looks like I just get the feel, and of course we could be way wrong. Does anybody else feel like Pfizer's a value trap here? I don't know. Not for me. It looks a little bit trappy, I guess. So Tyson Foods, it's food and people keep buying, so it's worth the dividends. Maybe. I mean, have they ever fixed their CFO, right? The grandkid of Mr. Tyson, I think. The guy that was waking up drunk, naked in people's beds. Yeah, Adam. The Blossom event is at the CBOE on Tuesday night. And I think you probably work there. I've never been. I've been near the building, but whatever pubs are around there back in the day when this guy was a young buck. Yeah, Bill, this is an interesting point where you say that you don't understand the industry, and I can agree. I think I don't know how any of us can reliably understand or predict what is in the pipelines of a pharmaceutical company, what is going to be the next blockbuster drug, which is kind of like why Warren Buffett would say that you needed to just buy a basket when they were at low valuations. I guess that, right? Pfizer fits that criteria. And the point being that I feel here, let me show you guys something. If I can remember the ticker, it's, I think STCE. I put this on my watch list, and yeah, let me show you guys this. I had a thought that, Adam, you traded yen futures. So you're familiar with the yen carry forward trade then, right? Remember when that was a thing? Everybody was freaking out about the yen carry forward trade. All right, let me share my screen here. But my thought here, this is STCE, the Schwab, and this makes me sick to my stomach, right? The Schwab Crypto Thematic ETF. I have a watch list on StockTwits, right? So I can keep track of stuff. But my thought was, I don't understand, like, it's hard for me to understand crypto and what the future is going to be. But I put this on my watch list a couple months ago, and when I did, it was under $50. So it's an ETF, and let's see, it holds here. The holdings are Cipher Mining, IRN, Hive Digital, Galaxy Digital, Bitfarms, BitDeer, I don't know what that is, Bitmine, Hut 8, CleanSpark, right? All this crypto stuff. But I thought, if you don't understand it, just buy everything, buy the whole sector, buy an ETF, right? And yes, you'll be getting the good with the bad, but if you don't know enough to stock pick like I do, and again, this makes me a little sick to my stomach because it was right around $50. Yeah, maybe I put it, I think I put it in early August. So it was maybe 50. I think I said under 50. I don't know. Memory gets fuzzy, but I remember it was in the 50s. And here we are now, 85. And of course, if it went down, I would say, good thing I didn't buy it. But anyway, my thesis was that I don't understand the crypto space. A lot of people profess to do. There's money flowing in, lots of money. And I looked into the ETFs, and I had found STCE, which is from Schwab, right? But Trevon, Costco, yeah, I'm looking at it. I'm watching. If it keeps getting lower, I really want it in the low 800s. But I guess I would pay a premium to start, right? If you guys listen to David Gardner, the rule breaker from Motley Fool, he would, sorry, fumble. Damn it, I knew I shouldn't have done this. I tell myself, like, I'll have it on in the background, but I'm human, ladies and gentlemen. I'm human. and we're almost done anyway. But Costco, Trevon, with Costco, I have here. Let me show you what I have. I have because this will make it easier. What I'm doing with the money that will buy Costco, it's been sitting patiently for a little bit, waiting in, like trying to get to it, right? He's stalling. You guys know, like when he starts slowing down the talking. Here, this is my portfolio. This is just on Simply Safe. This is not my 401k, my wife's Roth, anything. This is just, but I have my Costco money that's been patiently waiting in SGov, and that is the 0 to 3 month Treasury bond. So yeah, it's okay. I mean, it's just it's a little bit like what's the 4.14% is the yield. So your money's just, it's not going to erode. You're just going to get that 4.14%. But currently I have $1,506 in SGov. Well, that won't even get me 2 shares at 800 of Costco. But yes, I would like to use that to start my Costco position. And we'll see. I mean, even Nike, I could be talked into dumping that to buy Costco. I just enjoy it. And yeah, so those are those. But what is the one big stock that you want to look at buying this week? Let us know that. What do you? Ooh, yeah, that's pretty good. Anyway, I brought up David Gardner from Rule Breaker. He said when something is at all-time highs, the rule breaker part of it is to buy it, because if something's at all-time highs or looks overvalued, it's because it's doing something right. It's in demand. It's a company that's in demand. Whatever it is, people want it. The market wants it. So with Costco, that's why he's saying, just buy it. You can also buy it in thirds. If you were going to buy 10 shares, whatever, buy 3 now, wait a year, buy 3 more, wait another year, buy whatever it is. So that's kind of, which is, by the way, a book. Has anyone read Rule Breakers? Steve, I'll look for you real quick. Is Wendy's in safe? I believe it is. I think we looked at it once. It was borderline safe. I know they cut the dividend, right? They're under $10 a share. The dividend was cut and is frozen. Well, it's only been paid 2 quarters since they cut it, but they had to do that. I'm just skimming really quick here. Their net debt is still way high, but it doesn't do it for me. I wouldn't. I bought Portillo's. Hey, I'm up almost 10% on Portillo's. Mike, my thought is a little different on the S&P 500 because I think you just buy it. Honestly, I've forced myself to buy a few shares. Dude, I held my nose and bought at, I think the last VTI, which is very close, was 318, I think, 318 a share. And man, I held my nose. I said, this is crazy high buying here. And then here we are at 330. So Bill, you didn't, were you the one that emailed me? Because when I wrote about SGov, somebody emailed me and said, why would you do that? Just go Treasury Direct. And I looked into it. I was like, dude, this is a little, it's not immediately liquid with SGov. I mean, if all of a sudden on Tuesday at noon, I want to get cash in Schwab, I can sell SGov and I'll have the cash immediately available. It's just, I don't want to hold these SGov shares too long. And I'm really hoping that we have a significant market pullback so I can sell the damn things and put it into a company that I just felt was a little bit overvalued. Okay, it was somebody else then, but yeah, somebody was kind of telling me, just buy Treasury Direct. Like, why aren't you on why would you mess around with SGov? And I was like, all right. So that's what we did. That's what I'm doing. And you know what you're doing? You're going to watch Mr. Paul Rubin. So, hey, I'll get this microphone thing fixed for the next time. If anybody's watching and you are going to be in Chicago and you want to go, yeah, it is convenient, Bill, and you want to go, I have 5 free tickets. I'm still trying to give away. I know it's tough. I know it's Chicago. It's 6:00 on a Tuesday. in the city, not easy to get to, but you know what? Hey, if you want to go, somebody hit me up, email me, russ@dapperdividends.com, and I will try to get those tickets to you. But other than that, I mean, I love you guys. Thanks. We'll hang out again next week. Thank you so much for coming on by, and hope we all learned something, right? So take it easy. Peace.